Leidy's just said more like 50%. So with me, Charlie Gasparino, Stephen Leeb, Charlie Brady, and last but not least, Lizzie Wicked MacDonald.
That dude was a bitter old man. Not even a boomer.
Well, really what do you think of what he's saying, guys? Lizzie,
50%, that's pretty intense. I mean, I don't know. I think that's
but yeah, he's talking about things that go in waves. It wouldn't be like in a day. It's over.
I don't think he's wrong. I think there's going to be some kind of a pullback. The last time we had 3-5% pullback was Brexit. We had, what, 1% drops since August? I mean, I think this tax cut bill is a shambles. I think it's going to hit tax refund checks, the bonuses we get when we do our returns in those blue states, right? And so that's where the spending comes.
Technicals here.
Well, if consumer spending doesn't come in, the economy goes
multiple
wacko.
record highs with all the major indices, but you'll notice we've hit the record highs recently on not a lot of momentum, not big gains, small gains.
He's talking about this advanced decline ratio stuff that when it gets to.
Can I ask a question? When was the last time one of these technical guys called something?
Granville.
When was that?
That was 1979 or something.
Leidy's and Proctor called 87 period.
Okay, 87. I saw Ralph Acampora, I was talking during the break, in 92 call.
The Bear Stearns, the old Bear Stearns.
No, he called that the market was going to come back after the first George W. Bush
and it did.
SNL crisis collapse of the market. It did come back, but I don't hear him a lot. And
so you don't think these guys are right?
You know, look at it this way. Let me just make this point. You know, markets are based on corporate earnings, and they're based on macroeconomic issues.
But we've had crashes before where the underpinnings were fine. Earnings were fine.
And they've come back because of
derivatives and other things like 87.
You can have a crash. It doesn't mean we're going to have a bear market.
See,
yes, that's the whole thing. And
pullback.
A crash in 87, the market was up for the year.
Yeah.
And the other thing, this is just his history. You cannot find a major correction in the since going back to the 70s, 73, without a huge uptick in oil. I mean, an intense uptick. If oil goes to 100, 150...
How about 2008?
Can we just...
2008?
But what did we do with the depression?
Yeah, you're
right. Oil wasn't a factor.
He's right about that.
But there is something new. There is something...
OPEC.
Sorry, there is something brand new that's happening now that wasn't in play back then. $14 trillion in central bank money printing from around the world has sloshed into
Peter ignored it. When I talked to him, he says that's just noise.
No, it doesn't show up on charts and cycles. That's why this has never happened before. To Liz's point, it's unprecedented.
So you're in the camp it's different this time.
Well, no, I'm in the camp that we could see a correction. The problem is no one can time it, and being early is no different.
But technicians are married to these type of developments, right?
Charlie's right, yes. But yes, there will be a correction, and there could be.
Do you think we're long in the tooth for one?
Yes.
Yes, definitely.
But Charlie's right.
You seem annoyed that I even asked that.
What?
Go ahead.
Sorry. But it could be 2 years from now. There's nothing to indicate that it's now.
It's almost 9 years, this rally.
I know, but you had, like in 1968, I mean, I wasn't around then. I mean, as old as I look, I wasn't playing the game then. But in 1968 through 1972, 73, you had the same kinds of signs that you have today. But it took 5 years
but what if we
to
don't
get to
crash?
74.
What if one of the things I raised with him, he was mentioning that period from 66 to 82, right, where the Dow
but
just
went nowhere.
broke 1,000 briefly intraday and then didn't convince and close over.
Neil, we had an oil shock.
But I understand. Here's what I'm saying, though. If you average it out, the markets were flat.
Yeah. Here's one thing.
Not crash, just a flat.
Here's one thing that I think we have. Here's one thing you have to think of. You have to think of what will be the macroeconomic event that might cause it. And you know, before the housing crisis blew up, I remember, you know, I worked at the Journal. I worked at various places. We used to talk about housing. Is it too expensive? I mean, but it was like we were talking about this for like 15 years before it actually happened. Now, what is the one thing that might happen now? I think he mentioned one possibility is an unwind by all the central banks in the world at once.
Yeah.
Somehow jacks up interest rates.
Right, and to your point, Ray Dalio has said that it's boom-bust cycles of 17 years he's clocked and tracked it of debt cycles, right? So he's actually, the average is out like 16, 17 years. We're probably in the 7th inning.
Yeah, from 2000 to now is about 17 years.
But those last
can be
very long.
So is he, you know, you guys are kind of summarily dismissed.
But wait, you know, one thing, and I hate to bring this because you're talking technical stuff. If you look at these so-called FANG stocks, I mean, Amazon, Microsoft, Facebook, etc.
And Netflix.
Kind of spells out FANG.
Right, whatever it is, because you've got Apple
China!
Now. China. Well, China is something that could happen.
You really are an idiot. You know that?
I love it.
China is something. You got to be. I mean, seriously, I think Trump is doing the right thing. I mean.
But he did say, Eliade said, Prechter said this, be careful, Mr. President, aligning yourself to a market when it's going up, because you're going to have to own it when it's going down.
Right.
Absolutely right.
But there is no example of a major bear market without some sort of fundamental event triggering it. And how many technical analysts...
That's what I just said.
Yes, I agree with you. I agree with
macro
Charlie.
events.
We are the
agree
bitter
with all you guys.
He just said it.
I just said that.
So you guys don't see it happening.
And
you don't see it
I
happening.
see a pullback with Charlie in the first
Yeah,
half.
we could see something because of unstable
Not a bear
actors
market.
like Kim Jong-un. No, I think we could see a bear market, definitely, but it would be a buying opportunity.
That's a very Clinton-esque response.
Unless, look,
Depends on what
Steve,
the meaning
is
of
it gonna
the bear
happen?
is.
Yes, for sure.
When?
Neil.
When?
That, if I told you when, I would be
half of
lying.
next year.
I mean,
Gaspo.
but we'll
China!
China, yes.
There we go. That's all you need to know.
No, but
all right,
Another hit
we're done.
episode
We're
of the
done. We're
Boomers.
done. I'm very upset on all of
We
you.
didn't talk about millennials once.
No, we didn't. That's another show.
Well,
We'll have more.
I implied it when I talked about 68 and 73.
Right.
So.
Are we at the break?